LNG Limited's Q4 FY26 earnings conference call hosted by Ashika Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Krishna Doshi from Ashika Institutional Equities. Thank you, and over to you, Ms. Doshi.
Thank you, ma'am. Good morning and very warm welcome to everyone. On behalf of Ashika Institutional Equities, I welcome you all to Petronet LNG Limited Q4 FY26 earnings conference call. Today, we have with us the management represented by Mr. Saurav Mitra, Director Finance and CFO, Mr. Rakesh Chawla, Executive Director F&A, Mr. Gyanendra Kumar Sharma, GGM and President Marketing, Mr. Vivek Mittal, GGM and President Marketing, Mr. Debrata Satpathy, General Manager F&A, Mr. Vikas Maheshwari, Deputy General Manager F&A. We thank Petronet LNG Limited for giving us the opportunity to host the call, and we will now like to hand over the floor to the management for their opening remarks, post which we will open the floor for Q&A. Thanks, and over to you, sir.
Yeah, good morning, everybody. I'm Saurav Mitra, Director Finance and CFO. Thank you all for joining us for the earnings call for the quarter and financial year ended 31st March 2026. I'm pleased to share that the company has delivered a strong financial and operational performance during the current quarter. Despite the challenging external environment arising from the ongoing crisis in the Gulf region, the performance reflects the resilience of our operations, the commitment of our teams, and the continued trust of our customers and stakeholders. Coming to the operational performance, during the current quarter, the overall LNG volume processed by the company stood at 219 TBtu as against 233 TBtu in the previous quarter and 205 TBtu in the corresponding quarter. At the Dahej terminal, LNG throughput during the quarter stood at 201 TBtu compared to 214 TBtu in the previous quarter and 189 TBtu in the corresponding quarter. With regard to the operational performance of the Dahej terminal, I must mention that despite the uncertainties in the region, the Dahej terminal continued to operate at strong utilization levels, with capacity utilization at 90.1% during the current quarter as against 93.8% in the previous quarter and 85.2% in the corresponding quarter. I am also happy to share that the Kochi terminal achieved its highest ever annual volume throughput of 68 TBtu during FY25-26, which is an encouraging milestone for the company. On the financial front, the company reported the highest ever quarterly profit before tax and profit after tax in its history during the current quarter. PBT for the quarter stood at rupees 1,795 crore as against rupees 1,144 crore in the previous quarter and rupees 1,446 crore in the corresponding quarter. PAT for the quarter stood at 1,338 crore compared to rupees 848 crore in the previous quarter and rupees 1,070 crore in the corresponding quarter. For the financial year ended 31st March 2026, the company reported PBT of rupees 5,158 crore and PAT of rupees 3,843 crore as against PBT of rupees 5,275 crore and PAT of rupees 3,926 crore in the previous financial year. At the consolidated level, PAT for the current financial year stood at rupees 3,913 crore compared to rupees 3,973 crore in the previous financial year. During the current quarter, the customers also made payment of outstanding use of paid dues amounting to rupees 630 crore pertaining to calendar year 2022. Overall, the performance during the year was supported by operational efficiency, disciplined execution, and the continued focus of the company on ensuring reliable as well as efficient operations across both terminals. Considering the robust performance, the Board of Directors has recommended a final dividend of rupees 3 per share for the financial year 2025-26. With this, we now open the floor for the Q&A session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask questions may please press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions at this time. The first question is from the line of Probal Sen from ICICI Securities. Please go ahead.
From Qatar.
Mr. Sen, I'm sorry, you were not audible.
Is this better?
Yes, please
Yeah.
go ahead.
Yeah, thank you. Sorry for that, sir. I just wanted to ask, sir, with respect to firstly the quarter volumes, how has March actually looked in terms of volumes? You talked about utilization of 90%, of course, in the quarter. But if I can just understand in terms of what it was in Jan and Feb, and what was the volume shortfall, if any, in March? Hello?
Are we audible?
Yes, sir, you're audible.
Yes,
Yes,
sir.
sir. Go ahead.
So the Dahej capacity utilization during March was around 53%,
Okay.
and Kochi was slightly more than 20%.
Okay. So, sir, just as a follow-up, how do we look at basically now FY27? Of course, you will have the April data with you, but just in terms of this dispute, if it continues to persist, how much of our volumes can be potentially at risk at this point of time?
Okay. So Vivek, if you can.
Sure. So, Probal,
Yeah.
while we have just mentioned that March utilization was 50%, but things have been improving since early April or in March, and our utilization is steadily going up. So this is primarily through third-party cargoes, which are there in GAIL, IOC, BPCL, GSTC, Torrent bring in additional volumes, and and the prices are now at reasonable levels because immediately after that the prices spiked to $25 also. Currently, they are moving in the $15 to $17. So with the lowering of prices, we are seeing an increased utilization vis-a-vis March. That's all I can say at this point of time. And yes, if the conflict continues, it's slightly challenging, but Indian gas demand continues to grow, so and power sector is again coming back. So all this is supporting utilization, increased utilization of our terminal. As you know, we have expanded our capacity from 17.5 to 22.5. So in the percentage term, it may look on a lower side, but absolute utilization vis-a-vis last year, it should be competitive.
Right. So, sir, just additional supplies, are the additional supplies that have been spoken about quite a bit, particularly in the US, are they actually basically playing the balancing factor in the Asian markets right now?
A couple of countries, not just US. US is one of them, of course. But then Oman, which is very close to India, those supplies continue to come in. Mozambique. There are new countries like Nigeria and this was Congo. We got a cargo from Congo. We got a cargo from Mauritania and Senegal. So all these new supplies are adding up, and which is supporting. And interestingly, you may be aware that a new contract with Exxon, which we signed in 2017, supplies under that contract also started. So in April, we got the first cargo under that contract. So in the first year, though, it's 0.5 million ton, but that will also support to displace some part of the volume which has been lost due to this crisis.
Got it. So from on a year-on-year perspective, therefore, I mean, we should look at March as just a low base, and from here, it could actually at least improve at the margin from the March lows. That's how one should look at it, at least the next 2 quarters.
That's what we believe, probably.
All right. So the second question was with respect to the just a housekeeping on balance sheet. The big adjustments that have happened in the receivables and the payables, they are all the adjustment made due to the UOP dues and settlement. Almost a 2,000 crore reduction that we see in both numbers for FY26 versus FY25.
The receivables and payables actually because you see March our own volumes from Qatar Gas were not coming in March. That's why both sides, the receivable and payable are showing lower.
Okay.
Because majorly that is the LNG payable and the receivable with respect to the RLNG correspondingly.
Got it, sir. Last question, if I may. Any inventory gains that we have recorded this quarter and the third-party regas revenue for this quarter, if you can kindly let us know.
So the regas revenue is 879 crores for this quarter, and the inventory gain is 95 crores.
95 crores is the inventory gain.
Yeah.
All right, sir. I'll come back in the queue. Thank you so much and all the best.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much and congrats on good performance in this tough quarter. My first question is, have you had any communication with Qatar so far as to what is the status of the trains from which you buy, and when the war ends, how soon can they start supplying?
Okay, so we are in constant touch with Qatar Energy, and we are hopeful that the moment this conflict comes to an end, within 3 to 4 weeks, supply should resume.
Okay, so no impact on your trains at all, right? That's very clear now.
Yes, that's what we believe.
Okay, good. And secondly, on your project on the petrochemical side, are you getting your supplies properly? Is that on track or is that slightly slower?
So far as the project activity for petrochemical plant is concerned, the project is absolutely on track because the capital equipments generally don't come from the Gulf region. So whatever imports are there, they come from Japan, Korea, China, and from Europe and US. So that way, so far as supply of equipment, plant and machinery are concerned, there is no issue.
Great. That's all from my side. Thank you so much and all the best.
Thank you. The next question is from the line of Pranita from Morgan Stanley. Please go ahead.
Good morning, sir. Thank you for the opportunity. Am I audible?
Yes, ma'am.
Yes.
Please proceed.
Yeah. I was just wondering, with all the conflicts and the force majeures, I wanted to understand how are you thinking about gas sourcing in terms of diversification and the storage infrastructure for LNG on a medium-term perspective?
So I'm not sure if you have had a look at the certain news clippings today morning or the yesterday press meet which we had. So yes, diversification from India perspective is definitely on anvil, and we have been over last 2 or 3 years. You would have seen India has signed close to 10 to 12 million tons of long-term deals from various sources. So that diversification has always been part of India's strategy. In fact, some of our capacity holders have been a major buyer of this LNG, which includes GAIL, Indian Oil, BPCL, GSPC. So all of them have gone out in the market in the last 2 years and sourced LNG from portfolio players, US-based companies, Australia-based companies. So that diversification is already on the anvil and is taking place. As far as our capacity for storage is concerned, yes, on a strategic side, now we are definitely thinking India as a whole, as well as Petronet, to develop more tanks so that in times of crisis, those volumes are available for the market, so that immediately there is no impact. And on a longer run basis, we will be working on it and definitely come back to it once we have investment approvals in place for it.
Right, sir. Thank you. And I just wanted a clarification on the earlier comment you made on the Exxon contract. This is the Gorgon contract which you're expecting in Kochi sometime this year, right? It's the same contract.
Yeah, it's the new contract with the ExxonMobil Asia Pacific Pte. Limited. It's not a Gorgon contract. It's Exxon has a right to supply from their portfolio, where Gorgon is also one of the primary source. So it's that contract which is started in April this year. This is in addition to the existing 1.42 million ton contract with Exxon, which is already in place.
Okay, thank you.
Thank you. The next question is from the line of Nitin Tiwari from Phillip Capital. Please go ahead.
Hi, sir. Good morning. Thanks for the opportunity. So my first question is actually a clarification on the UOP accounting treatment. So we received about 630 crores. The reversal in P&L for provision is about 495. So is it right to understand that this is the rest of about 130 is booked in revenue?
See the reversal actually for CY22, whatever provision we had done, that reversal we did, and some provision was done in the current quarter itself for CY23 and CY24 as well. So
right, sir.
Adjusting that, I mean the reversal adjusted by the current provision, this number has come 496.
If you can help me with that breakdown, sir, I mean, like how much was reversed and how much incremental provision is made in this quarter, that would be very helpful.
See, just a minute. Just give me a minute.
Sure.
In the meantime, if you have any other question, you may continue to that.
Yes, sir. Sure, sir. So secondly, on basically CapEx projects, so if you can help us understand that what was our total capital expenditure in FY26 and what is the plan for 27, how much, and the capacity expansion that we have commissioned, have we capitalized that or we are going to capitalize that in the first quarter? So, I mean, those things, I mean, if you can get some color on that.
Okay, so far as the capitalization is concerned, yes, we have commissioned the project apart from a particular, facility. So, excluding that particular facility, which will be commissioned in this current quarter, the entire expansion capacity has been commissioned and capitalized.
Now, so any amount that you can help us understand which has been capitalized in this quarter?
We have capitalized 390 crores and balance around 100 odd crores will be capitalized in the next quarter. In this current quarter.
Understood, sir.
So Nitin, coming to provision question, the
Yes.
reversal is 550 crores for CY22, and for CY23 the provision is 35 crores, and CY24 the provision is about 6 crores, 586 crores.
Sorry, how much was that, sir? For CY24 you mentioned?
About 6 crores you can take.
Okay, sir.
And there is also a waiver because of higher volume brought, waiver of about 13 crores in the current quarter. So if you adjust these 35 crores, 6 crores and the 13 crores from the 550 crores, you will get the number of 496 crores.
Understood, sir. And lastly, if I may, just ask a clarificatory question on the question asked earlier on utilization levels. So you mentioned that the March utilization level was at 53%, and some offset has been brought in from some other location. So what is a ballpark utilization number that we should consider for the year ahead, I mean, for FY27, if this problem continues? If suppose the volume from Qatar doesn't come back, I mean, for 1 quarter or 2 quarters, what is a broad ballpark number we can look at?
So we should not be unnecessarily pessimistic about the entire year. We have the numbers of April as well as May. So we would like to restrict ourselves, in these 2 months only. And we hope that this, ongoing situation in the Gulf will end very soon. And as I've told you earlier, that the moment it stops, Qatar Energy would, be able to start the operations in the 3 to 4 weeks time. And so we are confident that maybe from the first week of June, the entire supply will come as per the annual delivery plan. And we are also talking to Qatar so that whatever volumes we have lost, if they can make good during the current year itself, that will be great for the company as well as for the country also.
Got it, sir. That's very helpful. Thank you so much. I'll get back into it.
Thank you.
And I think you had also asked about the proposed capex budget for the current financial year. So it's around 9,000 crore.
Thank you, sir, for answering all those questions. We'll take the next question from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir. Again, continuing with the same question on the capex, if you could provide the breakup of 9,000 crore capex for this FY27, that would be helpful. This is one. Second is related to the tariff hike at Kochi terminal from April. What was the tariff hike quantum on that side? Was it a 5% or lower?
5%. That's constant. And so far as the proposed capex budget for the current financial year is concerned, the major amount will be spent on the Petchem project only. So that's about 7,500 crore odd, plus minus, you can assume 10%. So we are targeting to achieve around 7,500 crore. So let's see. That's and we are more or less confident that we'll be able to achieve that target. And the rest are all, like the third jetty that we are constructing. So around 600 odd crores on the third jetty. And Gopalpur terminal also, we are planning to start our construction activities in this current year. So there also we plan to spend around 300 to 400 odd crores. So this is the broad breakup. Rest are all small, additional facilities, the routine capex. We also have a plan to put up our 5th small-scale LNG plant at Kochi, for which land has already been acquired, and we are planning to spend around 70 odd crores in that particular project. So I think these are the broad numbers.
Okay, sir, small observation on the cash flow statement side. As you guided, around 3,000 crore kind of capex for FY26 in our year call, but the cash flow statement is indicating 2,500 crore for the FY26. And secondly, a small question on the capex side again. Can we assume the same kind of a capex or quantum for the FY28, 9,000 crore?
Sorry, can you please come once again with your questions?
Yeah, sir. Observation on the cash flow statement side. In an earlier call, Q3 FY26, you had guided that kind of a 3,000 crore kind of a capex for FY26. While if we look down into the cash flow statement, it is indicating 2,500 crore. Is there any delay in the capex for particular project? If you would clarify on that side, that's one thing. Secondly, just wanted to take a guidance on the FY28 capex. Can we assume on a tentative side 9,000 crore kind of a capex for FY28?
Yeah. Yeah, obviously, see, what happens is the cash flow statement depicts the actual cash flow that is done. It doesn't take into account the provisioning. So the provisioning are different, and the cash what has been spent is 2,511 crores. So we can say that the whatever had been projected, it is going according to the plan. And again for the same principle will also apply for FY27 as well. There would be out of this 9,000 crores, there would be at the end of the year some would be done in cash and some would be in the provisioning level.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Bineet Banka from Nomura. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, in terms of potential off-taker for the spot LNG that we are bringing in, so who could be the potential off-taker at this price, $15 to $17 per MMBtu?
We are not, Petronet, we are not bringing spot other than the customers like ONGC for whom we are making endeavors to bring. It's being brought by our capacity holders for onward supply to various consuming sectors, which include CGD, fertilizers, refinery petchem.
Okay. And sir, so Gujarat Gas has guided around 5 to 6 MMSCMD additional gas demand from May onwards. So assuming that all of this demand flows through Petronet LNG, so I think incremental volume could be around 1.5 million tons per annum, which is close to 6-7% of your current volume. So is it the right understanding?
If that happens, you yourself have calculated numbers, and the numbers seem to be correct. But it all depends whether it is on a perpetual basis or a month-on-month basis. Primarily, I think they are targeting more the market, which is incremental of 5 to 600 MMSCMD, so which is what I think Gujarat Gas is mentioned.
Okay, sir. So lastly, that was utilization. I think you said for the quarter it was around 90%, and March it was 53%. So I'm not trying to get what would be the utilization implied for Jan, so it's over 100%, right? So yeah.
It was on an average about 108%.
So yeah, 108% for Jan and Feb. Okay. Okay. Yeah. That's all I'll go back with you. Thanks, sir.
Thank you. The next question is from the line of Adarsh Hinduja, an individual investor. Please go ahead.
Hi. Yeah, I think my questions have been answered already. But I wanted to understand one thing from you. There's a lot of different natural gas markers like the JKM, TTF, there's the US Henry Hub natural gas. So when you buy spot cargoes, on what rates do you negotiate these contracts at?
The spot cargoes in India typically are linked to JKM, or there is a specific index called as West India marker, which is also very closely related to JKM marker, which is the price of the Asian market.
And could you comment on what your in the month of March, what your spot cargo prices were, the purchase prices?
The spot prices were around $20 in the month of March.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Hardik from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So just want to check on, there is a substantial increase in non-current assets and the other financial assets. So can you just explain on that part?
Other financial assets, when it is increased from 406 crore to 1,319, that is mainly due to classification of fixed deposit, which is more than 1 year old. That has been classified into other financial assets, and which are below 1,000 crore, that are coming under cash and cash equivalents. So this is mainly a grouping issue. And as far as the non-current assets are concerned, these also include the capital advances of about 906 crores, which pertains to our ongoing capex programs.
Okay. Can you share what was the capex that was spent on the Petcom project in FY26?
New capex for Petchem project in FY26.
Okay. Petchem project FY26 was 720. No. It is around 1,650 crores. Yes. Including advances and CWIP, total net impact is 1,650.
Okay. That's really helpful, sir. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yes, sir, just one question. So, based on, your assumption of post-May, we should be seeing largely normalization of cargo. So, sum total for the year, what kind of utilization do you see at the aggregate level for your assets? And considering that there is a Equinor cargo which is additional starting May, so sum total, what kind of a utilization one should assume for your assets?
We never said that May onwards things will be back to normal, because it all depends on the conflict in the Middle East region, how it spells out and what happens and when Qatar resumes supplies. So it is very difficult to give a number at this point of time. But yes, you're right, the contract with Equinor will also start, wherein Performance Chemicals, which is a part of Deepak Fertilizers Group, will start bringing their cargo, and their first cargo is scheduled for arrival on 12th of May.
Okay. So we have two additional contracts, right? The Equinor and the Exxon.
That's right. Yes.
These two volumes, which are additional, is what number?
Roughly 1 million tons in this year.
Sum total?
Yes, sum total.
Okay. And so just for theoretical purposes, considering what you would have some assessment of April and May, and theoretically, if from June, Qatar, the Qatar cargoes normalize, then considering that assumption, what is the utilization one should consider for your assets, along with these two new contracts that you have?
I would
theoretical.
Very theoretical, you're writing.
Yeah, theoretically, yeah.
See, as we have already spoken, we are optimistic about the future, and from June things may start looking normalized. But whatever numbers will happen, it is very difficult to put any number at this point of time. And what indications you can calculate, we have already informed you what has been the March utilization level, what has been the January, February. So let us see what happens. With numbers, please, then you can calculate whatever the assumptions you already explained.
So I would request you to wait till the end of this quarter and see how things pan out.
Is there substantial improvement in the April and May utilizations?
No. It's more or less at the same level
as March.
As March.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Sarthak from DSP AMC. Please go ahead.
Hi, good morning. Thank you so much for the opportunity. So I just have one question regarding the storage facility that is available and how much CapEx do we need to do? Because there was a highlight on the press release yesterday also that we need to be very vigilant as a nation that storage facilities are very lower. So how as a company we are looking at our facilities and increasing storage facilities in the various assets that we have, and how much extra capex that we will need to do? Just wanted some clarity on that.
Okay. So for our Gopalpur project, we have already announced that we'll be constructing 2 tanks, and we are also planning to set up one more tank in Kochi. So that's right now we can say our current plan is all about increasing the storage. However, as mentioned by our CEO yesterday in the press conference, that some more tanks are also being planned at Dahej, and we are looking for land, because land is an issue. Availability of land is an issue in Dahej, but we are actively scouting for some additional land parcel wherein we will be able to put up some 3 to 4 additional tanks. But regarding these additional storage tanks at Dahej, right now there is no immediate plans. It's definitely we wish to put up additional storage facilities out there. But immediately we can say that yes, Gopalpur, which is a board-approved project, there will be putting up 2 tanks, and one more tank we are actively considering for our Kochi terminal.
Great. Just one small follow-up. Any capex number in your mind for the one additional tank in Kochi?
So it's about around 1,200 crores.
Okay, got it. Yeah. Thank you so much. That's it from my side. Yeah.
Thank you. The next question is from the line of Maulik Patel from Equirus. Please go ahead.
Yeah, hi. Just one question. Any update on that extension of contract from 2028? Have you entered into agreement with an off-takers on that?
I think I would only say that discussions are ongoing with off-takers, and once those contracts are done, we'll definitely inform investors as well as stock exchanges.
Okay. And just our contract with Qatar is from the train number 3, right? Is that correct?
Can you please come out with the question? Can you please repeat the question once again?
Our contract with Qatar for the current existing contract of 8 million ton is the train number 3 of the South Field, right?
Yeah, Maulik, this information we are not sharing actually. We do not share.
Okay, got it. Thank you.
Thank you. The next question is from the line of Vivekanand Subbaraman from Ambit Capital. Please go ahead.
Yeah, just extending on Maulik's question on the negotiations with the off-takers for the back-to-back contract. Now, I understand that it's from 2028, but you have signed a contract which is now DES, right? So which was earlier FOB from Qatar. So from a commercial standpoint, do you expect any meaningful changes in the nature of the contract based on the discussions that you've had so far? That's my first question. The second one is on the contracts that you had been signing for the expansion in Dahej, which is with the Deepak Group and ONGC. Is there any further discussion that you have had with your customers that you can update us on in terms of new business models like ethane storage, handling, or say monetization of that capex? Thank you.
So regarding the future business plans, as and when we sign definitive agreements with the customers, we'll definitely reach out to our different stakeholders, including the stock exchanges. And so far as your first question is concerned regarding the change in terms of cargo from FOB to DES, we don't see any need for renegotiating the Incoterms.
Okay. Fair enough. Thank you.
Thank you. The next question is from the line of Nitin Tiwari from Phillip Capital. Please go ahead.
Hi, sir. Thanks for the opportunity again. Just a bookkeeping question. What is the Ind AS impact for the fourth quarter and also for FY26 as a whole?
Yeah, the Ind AS impact is for the fourth quarter, 119 positive at gross margin level. Then there is a forex loss of 91 crores and positive 8 crores at OPEX level, and then depreciation 77 crores and interest expense on lease liability 59 crores. This is for the quarter. And for the year, at gross margin level, positive 629 crores. The forex loss is 199 crores. The OPEX level positive is 30 crores. Then depreciation 322 crores and finance cost 228 crores.
Understood, sir. Thank you.
Thank you. The next question is from the line of Varatharajan Sivasankaran from Antique Limited. Please go ahead.
Thank you for the opportunity. Sir, on the trading gains part, do we have any numbers we can share?
Yeah, it's 118 crores.
Okay. Secondly, on this parcels which are being procured from other regions like Nigeria and so on and so forth, what is the general spot availability what we see which has potential to be diverted to India? In general, if you look at the volumes flowing currently, what proportion of it would be contract and what proportion would be spot?
Very difficult to give an answer because, as you know, capacity is booked by GAIL, Indian Oil, BPCL. So it is their prerogative, and they have capacity in other terminals in India also. It is their prerogative which cargo they want to bring to the head and which cargo they want to take to their other terminals. So very difficult to give a number that what will be the proportion of spot cargo with their terminals.
I'm more concerned about globally and especially in the regions where you just referred to. Are there more spot parcels available, and has that spot parcel availability increased post-war?
When new facilities come up, so those volumes are typically broadly on spot or with portfolio players. So recently you would have heard that Golden Pass started export of their cargo from the US. So all those volumes will be becoming available to the market on spot basis.
Okay, no, sir. Thanks a lot.
Thank you. The next question is from the line of Somaya V from Avendus Spark. Please go ahead.
Yeah, thanks for the opportunity, sir. My first question is on the time charter, which you have mentioned in the footnotes. We'll be able to get back to normalcy if the Strait of Hormuz issue gets resolved, and we'll be getting the Middle East cargoes. Is the right way to understand? So we'll be able to utilize those three time charters.
Yes, those time charter vessels are specifically, hired for carrying cargo from Qatar to our terminals. So once the supply resumes, these time charter vessels will be again engaged as being done earlier.
Got it. So, and what is the existing contract duration for these time charter vessels? Like 6 months. Still, how many? In terms of the existing contract, how many more months remain?
So it is aligned with our SPA term. So as and when SPA terminates, comes to an end, the time charter will also be there.
Okay. Because it's a force majeure kind of a situation, so that's why we believe the 90 crores kind of a demand that's been placed for March and subsequent periods also is something that we are not liable to pay. So that's the thought. Is that right understanding?
Yes.
Okay. So, what would be the run rate for FY28 in terms of CapEx? So it will be similar to this 9,000 crores of 27?
Yeah, it's as has been discussed in the last call also. Basically, the FY28, FY27 we are saying 9,000 crores, and FY28 also should be at the same level, around 10% more or less. Similar.
Okay. And sir, in terms of payouts, so the historical payouts is expected to continue despite the expansion because of the cash in the balance sheet.
Oh,
Yes. Short answer is yes. See, I'll not go by the payout percentage, but in absolute terms, the endeavor is to maintain the same level of dividend.
Okay, understood. Thank you, sir.
Thank you. The next question is from the line of Gagan Dixit from Elara Securities. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, what is the status of this Kochi-Bangalore pipeline? What I know, I think that GAIL has pushed the timeline to, I think, September 26th. So, is there any update for this? And what is your
Whatever
utilization?
It's perfectly in order.
Okay, the first half of FY27. That's
Yes.
So, what is the Kochi utilization that we expect for, for FY28 when this full volume will be available on the pipeline?
Once the pipeline is complete, what would be the utilization of Kochi?
So definitely it's going to go up. There's no doubt about it because it will be opening for different markets and get connected to the national gas grid. So definitely the utilization will go up.
Okay, and sir, my final question is about the swap volume. I think this many of the, I think especially from the GAIL, this many swap volume coming from the US with the Middle East route. So I assume that from March that got stopped actually. So are you still getting the volume directly from the US or from those customers, or is it the shipping constraint that is hindering the full recovery?
So it is our capacity holders and off-takers who are bringing in these volumes.
Okay, that's fine. Yeah, thanks.
Thank you. The next question is from the line of Falguni Datta from Mansarovar Financial. Please go ahead.
Hello. Yeah, good morning, sir. I just had one clarification question. What was the capacity utilization for Dahej for March that you mentioned?
Around 53%.
53?
53, yeah.
Okay. Thank you, sir. And sir, would it be possible to say that how much is it now as we speak?
I have already shared that it is hovering around the same level.
Okay. Okay, sir. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
So thank you for joining us, and we hope that the situation in the Gulf improves very soon, which is going to have a very positive impact in our operations and as well as on the financials. And we also expect to come out with brighter picture of the financials of the company when we meet next. Thank you so much.
Thank you, members of the management. On behalf of Ashika Institutional Equities, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.